Today, we're digging into a massive question, one that affects the future of over 240 million people. Can Pakistan actually achieve economic sovereignty? We're going to break down the expert-backed roadmap that just might get it there.
So let's just cut right to the chase. This is the question on everyone's mind, the one that keeps people up at night. Can Pakistan really, truly pay off its mountain of debt? And you know what? The answer, according to economists, is yes, it can be done. But, and this is a really big but, it's not going to be quick, and it's definitely not going to be easy. The road ahead is long, and it's going to require some serious discipline.
So here's how we're going to unpack all of this. We'll start with that huge question about ending the debt. Then we'll dive into the 4-point recovery plan. We'll also explain why Pakistan's debt is a whole different ballgame, check in on the current economic situation, and finally, get real about the difficult journey that lies ahead.
Okay, first things first. Let's talk about the biggest, most immediate fear. Is Pakistan on the verge of defaulting? Of simply not being able to pay its bills? Well, for now, we can all breathe a little easier. The short answer is no, the immediate risk is off the table. Thanks to a really critical IMF program and, just as importantly, some major financial help from friends like Saudi Arabia, China, and the UAE, Pakistan is making its payments on time. That's been absolutely crucial for calming nerves in the global markets. But, just avoiding a catastrophe isn't the same as building a strong future. That's where the real solution comes in, and it's built around a 4-point recovery plan. And this isn't just some theory stuck in a report. It's actually happening. Just look at the recent sale of the national airline PIA. That move alone brought in 135 billion Pakistani rupees. It's a perfect example of turning a company that was losing money into a valuable asset for the country. So here's the whole game plan. First up, privatization. This is about selling off these huge state-owned companies that have been losing money for years and just draining the budget. Next, step 2, boost exports. The idea is to go all in on sectors with huge potential, like IT, agriculture, and textiles, to bring in those precious dollars. Then there's step 3, expand the tax net. This is a big one. It's about making sure everyone pays their fair share, especially powerful sectors like big retailers and real estate that haven't always done so. And finally, step 4, attract foreign investment. Countries in the Gulf are already lining up to pour billions into Pakistan's mineral and agriculture sectors.
Now, you've probably heard someone say, hey, America has trillions in debt, so what's the big deal with Pakistan's? That's a great point, and understanding the difference is absolutely key to understanding the whole situation.
Here it is, the critical difference. America owes money in its own currency, US dollars. If they get in a tight spot, they can literally just print more money. Pakistan's debt, on the other hand, is in a foreign currency, US dollars. Pakistan can't print dollars. It has to earn every single one, either through exports or by attracting investment. That's why boosting exports isn't just a nice idea. It's the country's economic lifeline. Okay, so we've got the plan. But is any of it actually working? Is it making a difference right now? Let's take a quick look at the economy's vital signs. And there are definitely some positive signs. It wasn't that long ago that inflation was at a crippling 40%. But now, it's been brought down significantly. That's a huge signal that some much-needed stability is returning. And it's not just inflation either. Investor confidence is making a comeback. The Pakistan Stock Exchange has been on an absolute tear, shattering all its old records and soaring past 170,000 points. In plain English, that means investors are starting to bet on Pakistan's future again.
So, we've laid out the plan, and we've seen some green shoots of recovery. But it's time for a serious dose of realism, because this journey is far from over.
The bottom line is this. Yes, paying off the debt is possible, but it all depends on 2 things that are absolutely non-negotiable. 1, strict, unwavering financial discipline, and 2, continued political stability. And this isn't something that gets fixed in a year or 2. We are talking about staying on this exact path without any major detours for the next 10 to 15 years.
We've spent this whole time talking about how Pakistan can solve its debt problem. But that leaves out a pretty fascinating question. Who? Who exactly holds the cards? To really get the full picture, you've got to know who the country owes all this money to. So here's something to think about. Do you know which single country is Pakistan's biggest individual creditor?